All right. Good day, traders. Welcome back to the live trading room. How's everyone doing today? The New York live trading room. Let me know if you can hear voice, see screen. Make sure everything is a go. Welcome to those watching on YouTube and TradingView. As you guys join me every Tuesday, Wednesday, and Thursday inside the Tier 1 trading live trading room for the first trading idea of today. Today should be a pretty simple one, so I'll have you in and out. But good. Orsi asked earlier, how am I doing? I'm in a funk, Orsi. I'm in one of those rough periods in my trading. Happens every year. You know it's coming. You know how to deal with it, but never feels good when it's here. So taking my medicine, right? It's been a good start to the year, but recently, last week and a half has been pretty funky. Not week and a half. Well, I guess since this Sunday. So this first half of the week, I should say. But taking my medicine, a few losses. Pound yen earlier in the week, pound dollar yesterday. I got the Aussie dollar trade that we showed you guys yesterday. That has not lost, but the double bottom has been invalidated. So just like we talked yesterday about graceful exits, I'm assuming it's going to lose. I'm mentally preparing for it to lose, but you never know. It does have those overlapping levels of structure. So that one is nothing certain, but not as sure of a loss on that one as I was in the pound dollar because of those overlapping or underlapping levels of structure. But we'll see. We got a few people on YouTube saying same here in the funk. Yeah, it happens. It happens. My best bit of advice is this. Don't fear it. Don't run from it. Don't panic. We're talking about the drawdown. All of those things will just make you or cause you to make even worse mistakes. You just accept it. You take your medicine, right? You go to the doctor. I don't think anyone likes getting shots, but you get your shot. Your arm goes numb for a little bit. You feel better and you're healthier than before. So that's what you do. Ali says, how do you deal with losing streaks? Do they still bother you the same way? No, they do not. I don't want to say they don't bother me at all. Evan says he lost pound Aussie. You lost the pound Aussie, Evans? As well. Adding to the streak. Come on. Misery loves company. Come on with it. I don't want to say losing streaks don't bother me at all. That would be inhuman. But you just accept them. Again, it is. I look at it as it is the cost of doing business, right? The other day, I took my kid to like one of those gas station type of stores, get him a treat. He helped me out with something, so I took both kids to this place. We got these big old slushies, right? So these big sugary drinks. And right before we got to the cashier line, you know what happened? I knew it was going to happen. If you got kids, it always happens. Drop, splash, boom. Spilt the entire drink, right? Manager came out, said, don't worry about it. Go get another one. We'll go ahead and clean this up, right? Now, technically speaking, the business took a loss on that, right? Technically speaking, the business took a loss. That is the cost of doing business. It is built in to any business. Same thing if you go to McDonald's and they mess your order up and you return it, right? They can't just repackage and sell that order to someone else. They got to dump it. Same stuff. I hate this part, but restaurants at the end of a certain period of time, right? They can't necessarily save the food. You got to dump it, right? It is the cost of doing business. It is built into every business. If you've ever started a business, when you map out your business plan and you do your expenses and your predictions, that is a cost that is calculated in. Trading is no different, right? When we look at our 40% return a year, that's not the only number we're looking at. The 40% return is after everything. Losses are taken into account. What type of percentage hit do I have to take to make that 40% return? And that's why, I did a podcast on this before, but we talk about, we had a conversation yesterday about this a little bit. I'm not sure if it was on the I think it was on the first part of the session, so YouTube heard it as well. But we were talking about kind of knowing your numbers and whatnot. The most valuable part for me, of knowing my number is it isn't necessarily the actual number. It is the equity curve, because the equity curve tells me the story of how that number was achieved. For me, that is much more important. And especially from a psychological standpoint, right? Think about it from this perspective, guys. If I told you, right, hey, Evans, you're going to make 50% a year, right? You're like, again, unless you're this trader on the internet that thinks 50% is a bad thing, you're looking at 50%, you're like, okay, I can get down with that, 50% a year. But as soon as you hit a 10% drawdown, you start panicking because you're like, wait, I'm supposed to hit 50%. I'm not supposed to be negative 10. But if you have the equity curve, and the equity curve shows you the path of what it took to get that 50%, where you start off negative 10, and you go plus 20, then you go back to plus 10, then you go plus 30, and you go back to plus 25. Now you kind of understand, okay, there's going to be these ebbs and flows. There's going to be these wiggles. This is a natural part of the process, and it helps keep you mentally sane. And that's necessary. Once you get experience in the market, then you have more and more belief. So over years, you get more and more belief because you're actually doing it. But at the beginning, it's another reason why backtesting is so important, because until you actually have those live results to be your proof, that's the best you can work with to anticipate what it's like. Or she mentioned something as well, right? We were talking about the restaurant or the store where they gave my kid the free slushie, said they kept the customer. Yeah. And you can look at that from a trading perspective as well, right? If you're in a drawdown, let's say you have a good system and you're in a drawdown and something happens, right? That drawdown is a spill and you bail on your system. Well, what are you doing? Well, you're starting from scratch, which is a waste of time. You're also probably going to miss the best period of your system. But for those who can fight through it mentally, stick with their system, the best is yet to come. They'll be benefited. They'll reap the benefits at the end. So it happens all the time. It happens in different ways. I've had, I can give you the stories of my two worst drawdowns. One was a 17% hit to start off the year. January 1, straight down 17% from like January 1 to like mid-February. I think it was like 6-week period. That's the harshest drawdown I've ever taken because it came quick. And then the rest of the year was great. If you go back on YouTube and watch those videos, you'll see the documentation of it, where I started off the year saying, man, I suck. But wait, it's only 1 month in. Wait to see how we turn this thing around. And we turned it around, right? I just happened to take all of my losses at once and right away. And then I've had drawdowns that stretched out. I think my longest actual like time duration drawdown it had to be, I think, 20 something weeks. It was like an entire summer, right? Does that sound right? Maybe not 20 weeks. That's maybe too much. It was like May to August, June, July, August. So maybe close to 20 weeks. And it wasn't a bad drawdown at all. It was more of like a break even type of drawdown, like losing like 1% like a month. But I just couldn't, for the life of me, I couldn't get above that previous equity high. So different types. You can get sharp and painful. You can get long and torturous. You're going to experience them all in your trading. Real quick, someone on TradingView says, can we look at gold? We're actually going to look at the FTSE today. So what we do here, if you guys are new, in the live trading room, we'll look at everything. So we can certainly look at gold as we go into the live trading room. But the part that I stream on YouTube and TradingView, we just look at one trading idea for today. So I chose the FTSE because I think that's the best opportunity for today. In comparison to gold, there's not much that I think we're going to get a lot out of in gold. We can certainly talk about it, but we can view it later in the live room. But unfortunately for today, for the live stream portion, we're going to do the FTSE. So Let's go a real quick. Cody says you will learn the most from your drawdowns and you'll understand when you get there. Mm-hmm. Yeah, you will. You learn a lot about yourself too. So, Mickey says on YouTube, Euro dollar just broke structure. We did, but we broke structure. But are we clear of structure? We broke the structure level we had yesterday. But if we look left, are we in the clear? What would you guys say? No, I was actually excited about Eurodollar this morning because I had it on my daily and I had the structure level we were looking at yesterday, and I woke up and saw the violation of it. I'm like, oh yeah, trend continuation, baby, because all I didn't look past on my daily these lows right here. Then I zoomed out, of course, as we did. I went up to the weekly just to get a bigger perspective. I said, we're still in this stinking area. The 2-year consolidation stretch. I remember this in my trade, and this was horrible. But let's go to the FTSE. And we're going to check out a trading opportunity here. So, bigger picture. I'll get my notes ready for the recording. Bigger picture. What would you guys say we have done here? Obviously, we've consolidated. We've broken down. We've returned to that previous area of consolidation. What would you expect to happen next? If past has given us any clues of what the future may hold. Probably a little bit more consolidation. Yeah. Probably a little bit more consolidation. Probably some type of repeat of what we saw here on the left. So already in my mind, I've got consolidation. Now, what's interesting, right? We go from a weekly, which looks like this. We go down to the daily. We essentially have the same type of pattern. This is an inverted head and shoulders, right? The same type of pattern forming on a more micro basis, right? So same thing. I'm expecting that, hey, if this is going to be essentially a right shoulder, we are going to return, right? Again, this is my prediction, up to this level somewhere and then consolidate and maybe break, maybe not break, but some type of back and forth movement. I do think the market is interested in this level. I do think we'll see some type of battle between buyers and sellers. We are on the UK 100. UK 100, the FTSE. Yep. So not a currency pair today, switching it up as we like to do every once in a while. So let's head down to the 4-hour, right? And let's see if anything clears up, right? You guys start to notice anything here on the 4-hour? We're actually seeing this very same setup. It's already occurred on dollar Canada, but almost exactly the same setup here. But you guys notice anything for me? Yep, we've got a potential bat pattern. So one of our ratio patterns, one of our harmonic patterns, right? I'm going to label this out for you guys that are new to this type of stuff. But this is going to be our X up here. This is going to be our A. This is going to be our B. This is going to be our C. And this is going to be our anticipated D. Right? I'll put some question marks around that because we don't know if the D is going to complete. But what we have is a move that looks like this. And you can probably draw this 2 different ways. I'll draw it both ways. I'll draw it the way I see it, and I'll draw it a different way. But this initial move right here, if I get my triangle tool out, where you at? There you go. Is going to be our X to A, right? This is our impulse leg, our initial move, our starting point of the pattern formation, our swing high to swing low. Our retracement right here is going to be our B leg. This comes to a 50% Fibonacci retracement level. That's how we know it is a potential bat pattern and not a Gartley pattern or a butterfly. So the depth of the retracement separates what pattern we're looking for. This failed extension down here, right? Retest our A leg is going to be our C. And then if we rally up to the 886 Fibonacci retracement, And that Fibonacci retracement is taken from our X leg all the way down to our A leg, so the extreme high to the extreme low of the pattern formation. That is going to give us a decompletion right here, which would form a bearish bat. And by bearish bat, what I mean is in this scenario, you would be looking to sell. Now, the kill zone, or the reversal zone, I should say, got to watch my words here, the zone in which we're looking for this pattern to complete, I will never get these tools right, is going to start at our 886. That's the first part of our completion, and it's going to go to the top of our X. Now, if you're seeing this entire move as a X to A leg, unfortunately, you're not going to have a bat pattern because we're going to fail to meet our Fibonacci requirement. So keep that in mind. Now, what's interesting about this bat pattern completion, this zone, right? Obviously, it comes up to a previous level of structure here. We have that X leg. It's always going to be structure. We also come right in the middle of our consolidation area right here. And if we do this, right, I'm playing around for our volume profile for the last 4 months. We look at our volume profile for this most recent swing. We're going to see that our biggest spike is going to come right in the middle, or I guess the lower end of this consolidation, which is right around, right, a little bit before 786, but right around where this bat pattern completion would be. So adding a little bit of confluence there. So an excellent opportunity to take advantage of a ratio pattern, a advanced pattern formation. This is not one, right? Remember, we did our higher time frame analysis. This is not one where I would look to get cute. I don't think there's any reason to look for any extended targets. I would treat this just like the consolidative pattern that it is. Get in, get yours, get out, and then wait for the next opportunity. So a short and simple one today. Any questions on this? Calvin, are you still there on TradingView? Give me a yes if you are. Feeling generous, so I may look at gold. I feel bad. I always say I'm going to do one thing, and I feel bad when people ask and I give in, but I don't know if he's still there. If you're still there, Calvin, let me know. We can look at gold. But if not, we're going to shut you guys down. We'll come back tomorrow. And I can tell you this, guys, if you have something you want to look at, hit me up on Twitter, hit me up on Instagram, anywhere on social media before the session starts, and just say, hey, Akil, I had a question about this, or we're wondering if you want to look at this. We call this live stream part the top trading idea for today, but it's not really the top one. It's just something that I think is going to be useful for you guys. Sometimes it is the top one. Sometimes the top trading idea is pretty boring because we've been looking at it for the last week. So I don't want to come here and do the same thing every single day. But feel free to reach out to me and contact me. Let me know. But yeah, live streamers, I'm going to kick you out. On your way out, hit that like button. As I disrespect you and kick you out of my house, hit that like button. Leave any comments if you have any questions. Live rumors, I'm going to get this into our pro trade log. So give me a second. You know I can't type and talk at the same time. So I'm going to mute the mic for a little bit. Then we'll come back and look at something else. I didn't have a whole lot on my radar today. So if there is something you want to take a look at, let me know. And I'd rather jump there sooner than later. But give me a few seconds. I'll get this into our pro trade